Hello, everybody. Hope you're all having a nice weekend. It is September 9th, 2023, and that's relevant because we're going to be looking at some of these charts here in real time. I don't want to look at things like from a year ago, be like, oh, this is what happened then, this is what happened then. I think if you really want to learn about trading, you need to think about things in real time. You can't just listen to some guru talk about what they talked about a year or two ago. So anyway, I want to look at some commodities, and I know a lot of our stock market jobber people are not futures traders or commodities traders. But if you're not and you're new to the community, I want you to understand that you can get exposure to pretty much most of the commodities in the ETF market or in equity markets. So let's just get right into it. So here we have crude oil. Probably have heard about this recently. Probably have noticed when you went to the gas station, you're paying more. So here we have an example of levels that were important, just like we always do. It's one of the things about markets. You have price levels that are important, price levels that aren't. Look at this. We got support there and then resistance here. Resistance here, resistance here, resistance here. All around this 83.20 level. I mean, what's so important about it? I don't know. But I don't need to know. Oh, look at that. Resistance here, resistance here. This is the 93 level. Why would resistance here become resistance here? Well, there's people who bought here who regret their decision to do so when the price goes lower. And they say, man, if this ever gets back up to my price, I'm going to try to sell. So if you have enough remorseful buyers placing sell orders at the level that was resistance, it becomes resistance again. Buyer's remorse. Here's another example of buyer's remorse. Support can become resistance. Well, people bought here, price goes lower. I mean, at first they thought it was great, but then the price goes lower and it's like, I made a mistake. If I can get out of this thing at break even, I'm going to. If it gets back to my price level that I bought at, I'm going to sell. If you have enough remorseful buyers placing sell orders, the level that was support becomes resistance. So buyer's remorse can keep resistance. Buyer's remorse can turn support into resistance. It's just one of these things about markets. Now, why would a level that was support become support again? Seller's remorse. This is where we have people who sold. They regret doing so when the price moves higher. They say, man, if I could buy my shares back, or in this case, my contracts at the same price I sold them at, I'm going to buy them back. So if you have enough remorseful sellers placing buy orders at the level that was support, it can become support again. All right. Remember this. Psychology makes certain price levels more important than others. All right. Let's not get too far away from our stated lesson here, or stated mission. So if you want to get exposure to oil and you're not a futures trader, you can check out this ETF, United States Oil Fund. Symbols USO, trades just like a regular stock or an ETF. A lot of complex things going on behind the scenes here, but you don't need to worry about them. For you, for me, it's just like buying a regular ETF. Now, it doesn't track oil perfectly, but if you think oil is going to really run, hey, here's a place to get exposure to it. All right, now I guess let's look at gold. I mean, why the hell not, right? Commodities people love gold. Here is gold. And once again, we can see our things we just saw, right? Why would resistance become resistance? We talked about buyer's remorse. Why would support become resistance? We talked about buyer's remorse. Why would support remain support? We talked about seller's remorse. Isn't it amazing that we're looking at a completely different market and you see the same things? Now here we have resistance becoming support. This is seller's remorse. So seller's remorse can keep support intact. Seller's remorse can make resistance convert into support. There's a lot of investors who sold who regret their decision to do so when the price goes higher. They say, hey, it gets back to my price, I'm buying my gold back. Now, in terms of the ETF, right, you can buy GLD, spider ETF that's designed to track the price of gold. Doesn't do it perfectly, but for our intents and purposes, it's more than enough. Okay, we could see resistance, same levels. Now, if you're really bullish on gold or really bearish, if you buy options, there's this gold miners ETF, which is something to consider. If you're bullish on gold, you might want to consider this, because if gold goes up like 1 or 2 or 3%, this is going to go up more. This is a ETF of miners. I mean, gold miners are very risky. Most of them are, I shouldn't say most, but a lot of them are these little like mom and pop mines down in South America. And if they got one mine, and if there's a labor shortage or labor issues, it's the company could have real problems. So I don't know enough about gold miners in and of themselves to make any recommendations of specific companies, but I do know that if you want to buy gold, you might want to consider this, because if you're right and gold goes the way you want it to, this is going to go up by more. And I apologize. I should really get rid of this 18 months here. This came from a presentation I just did not too long ago. All right. So now you're probably saying, well, what about silver? Well, we got the silver ETF, SLV. This is designed to track the price of silver. And we can see what we just talked about. Resistance, support becomes resistance, support stays support. Now, I think there's a silver miners ETF. Silver, we're going to go to all over here. Silver miners ETF. Okay, SIL. And it's the same concept, right? You think silver is going to go up, you're going to buy it. Well, you may want to consider this, because there's a chance it moves by more than silver does. Of course, if you're wrong and it goes against you, it goes the other way. You got to keep that in mind. All right, what else? Natural gas. A lot of talk about natural gas lately. It's been kind of hard to trade, frankly. It's been in the middle of a range. And here are the futures. But if you want to gain exposure to natural gas on the upside, you can buy the UNG ETF. It's an ETF that tracks the price of natural gas. You can even think about it like this. Say you heat your house with natural gas, and natural gas goes through the roof this year. Well, you could buy this as a hedge. Maybe you lose money on having to pay more for natural gas, but you're going to be making money in your UNG position. All righty. Let's go look at, let's say, wheat. A lot of inflation out there. I don't care what anyone says. As a matter of fact, we can look at that too. We'll do that next. Now, here's wheat. You might think, how the hell why do we see the same things playing out? Like support becomes resistance. Support becomes resistance. Support remains support. Resistance becomes resistance. How is it possible that we see these same patterns or these same dynamics in financial markets that are so different? And there's really an easy explanation for it. What we're looking at in a chart is a graphical illustration of the investor psychology, the investors who are trading this. I mean, think about it. The reason why support here became resistance here has nothing to do with the wheat market or what's going on in Russia or Ukraine. It has to do with the fact that there are a bunch of traders who bought back here who want to get out once the price goes lower. I mean, they thought they were the kings when the price went higher, but support becomes resistance because of psychology. Support becomes resistance because of psychology. Support becomes resistance of psychology, blah, blah, blah. I get sick of saying it, but it's this repetitiveness and just kind of drilling into your mind, which is going to make you money. So that's wheat. Now, you don't trade wheat futures. What can you do? Well, you got this wheat ETF, WEAT. Okay. You can get exposure to the wheat markets by this. WEAT. It's just a trades like a regular ETF. So what I'm trying to say is this, right? Do not get put off if I'm talking about commodities, because there might be a great idea in the commodities markets. And if you don't trade futures, get exposure over here in the ETF market. Let's look at soybeans. Did you ever think you would be a soybean trader? Probably not. And the symbol on this one is easy to remember, SOYB. And let me get rid of this here today. So you want to get exposure to soybeans? Here you go. Now you can impress your friends. Like, oh, hey, what are you trading? I just got long soybeans. They're going to be like, wow. Well, tell them to join our class, because it's not as mysterious as it seems. But we see these same principles, right? So resistance, 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 resistance. Down here, we got support at a former support level, support, support. The best traders don't guess. They follow the market. The market talks to them. How does the market talk? Well, by how it acts when it gets to these important price levels. For example, we just got up to here and soy didn't look like it's going to go through. Had a little bit of a sell-off. Well, guess what? If you're a soybean trader, that could have been huge profits there. Buying puts, futures. Although, again, a lot of our students don't trade futures. All right, so that's soybeans. We could always take a look over here at, let's see, copper. Here is the copper. Same thing. We could see these same principles. Resistance, resistance, resistance becomes support. Resistance becomes support. Support becomes support. You might be saying, like, gee, Mark, why is it that when something gets support, it rallies? Well, because there are people who want to buy and they're watching this thing, and markets go lower because there's not enough buyers. And when the market stops moving lower, some of the traders want to buy are like, wow, it's not moving lower anymore. Must be new buyers coming into the market. I better be aggressive and jump ahead of them, or else the sellers are going to go to whoever's willing to pay a higher price. So you get this snowball effect and it causes a rally. Now, in terms of how can you trade this, or how can you get exposure to this, I should say. A lot of investors look at this here, the Global X Copper Miners ETF, COPX. And you can see it's a similar pattern, right? Not exactly, but if you want to get exposure to copper, you think copper is going up, here's something that you can look at to buy. If you're right, you're going to make some money. So don't say, oh, copper's blowing off, or copper's oversold, or copper's over. Don't think like, oh, gee, well, I only trade stocks, I can't get copper in my portfolio. Well, yes, you can. Okay, all right, let me go with one more here. Let's just take a look at lumber. Lumber futures. All right, so here's lumber. Once again, I hate to sound like a broken record, but we see our same principles, right? What was support? The support again. What was support became resistance. Now, there's really not a good way to get a really good exposure to this, because there's no ETF, as far as I know, that tracks lumber, but there are ETFs that track lumber companies. So this will be easy to remember, especially for the fellas out there. Wood, right? So here is the ETF that you can buy that's going to give you exposure to the lumber market. So there's lumber. There's the ETF, not perfect. Thank you so much. Please make sure you become a member of our stock market jobber community. One of the things I like to teach is that there's always ways to make money. You never, as a trader, have to put your head in the sand and be like, please make this go away. I mean, if you're having a bad run, you should stay out of the markets for a few times, but we can make money. Oh, actually, you know what? I wanted to show you one more thing before I go here. So the government is lying to us again, right? Not surprisingly. Do you think we have probably one of the most pathetic administrations ever? But whatever. But all right, so they're telling us, okay, yeah, well, yeah, blah, blah, blah. Inflation's coming down. So Biden's amazing. It's like his policies cause inflation, and now he's taking credit for bringing it down. It's just, I mean, I don't understand how people could take this guy seriously. But anyway, okay, inflation's up 3.2% year in the year. Well, guess what? Since June, this index, which tracks commodities, is up 10% since June. So what does 10% in a few months translate to in a year? I'll let you figure that out. And then just before I go here, you can make money in a deflationary or in an inflationary market. One of the easiest ways too is this ETF right here. This is an ETF which tracks commodities. And as you can see, had you purchased this back here, you would be up about 10 or 12%. So this ETF tracks inflation. Back when the whole inflation thing was going on in 2022, in the beginning of last year, this thing was up 50% from December to June. Okay, everybody, thank you so much. I appreciate you being here, and I will talk to you soon. And we got the NFL tomorrow. Should be some interesting games. I think what's going to be really interesting is the Jets Bills on Monday because Aaron Rodgers' debut, and it's also the anniversary of 9/11, which is a team that was, an event that really affected the Jets. Okay, everybody, thank you so much, and we'll see you soon.